Hey everyone, Couch Investor back to another video for today. So in today's video, we're going to go over UiPath earnings report. Of course, if you've seen the stock's reaction, you already know what happened. Pretty good report, beat on earnings per share estimates and revenue as well. And of course, the market was extremely happy with the guidance that was given. That's why the stock yesterday soared 17% or so. Of course, at the time of making this video, the stock might be down a little bit depending on the market's reaction. Of course, it's again been a roller coaster week. Bank drama, Fed, everybody has their own thought. Market go up, go down. Let's wait and see what actually happens in the next Fed meeting. Now, of course, UiPath, pretty popular stock on Wall Street, growth stocks, and of course, a pretty popular stock in ARK Invest. So the combined ARK portfolios, UiPath sits at number 7 right here, under Square, just above Shopify. And the last time they actually bought some shares was all for the ARKQ fund. So in February, they did some shopping. They acquired more shares there. You can actually see here over time, they acquired quite a lot of shares when the shares were on the way down. Now, as for the graph itself, on a technical basis, of course, it's up around 70% since its lows back in October. Yesterday, as you can see, this is the weekly chart, so today we might try again. But right now, we got rejected on the 200-day moving average. When it comes to the MACD, extremely positive, pretty close to the zero line here. So maybe if we could push a bit more, that would be great. RSI, to me, still okay. So overall, let's try and see if we can finish this streak strongly. If we can go over that 200-day moving average on Friday, that could be nice. If not, let's try again. But right now, a little rejection here. And before I jump into the earnings report, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, would really appreciate that. And if you want to support me even further, do check out the links down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. So let's jump right into this, the highlights. So revenue grew 7% year over year. Of course, if you look at the growth for this quarter, you might see this is a growth stock, only growing 7% or 12% on an FX neutral basis. Yes, of course, difficult times. So even growth stocks aren't growing as fast as they should be. But overall, for the full year, I think they finished their year pretty strong. Growth of 19% year over year, or 27% on an FX neutral basis, reaching over $1 billion. Now, annualized renewal run rate reached $1.2 billion, so that's good, still growing there. On a growth year over year basis, that's 30%, FX neutral basis 34%, so good growth on that front. Of course, on a GAAP basis, they're still unprofitable here. Operating margin of negative 15% for this quarter, negative 33% for the year. On a non-GAAP basis, margin 22% for the year, just 6%, should improve much more next year or fiscal 2024. Now, when it comes to acquiring more customers, more high-ticket customers, so they say you're scaling large customers, which basically means customers that spend or have more than $100,000 in ARR. That increased, I believe, 70 customers quarter over quarter, year over year. Here we have an increase of close to 200. Then this is what the market actually likes. It's their focus on those customers that will spend big with UiPath. So we can see here, this is, I think, the first time that we'll get to see this. So becoming C-suite priority, customers that spend over or that have over $1 million in ARR. Quite a nice increase here year over year. Now, of course, UiPath plays in various industries: healthcare, financial services, manufacturing, and the public sector. Every sector could use a company like UiPath to better manage their business faster and maybe even with less people. Unfortunately, that's just the way we're going. Sometimes, maybe, I don't know, in a couple of years, at the end of the decade, a lot of jobs, let's say, that are run by humans right now will probably be run by AI or a company or a software like UiPath. And of course, again, this is maybe a better representation. So they say here aligning sales resources to opportunities. So this was the prior model. The Wall Street, the market didn't really like it that much. So they like the focus on going to enterprise, corporate to mid-size market as well. So that's for fiscal year 2024. And again, the shift in momentum here has been pretty clear. Before, in the last 2 quarters, Wall Street wasn't really happy where the focus was, where the growth was, spending-wise as well. Right now, they finished the year strong. Guidance was better than expected as well. More focus on those clients that will spend more with UiPath. So obviously Wall Street likes that. Now, of course, when you talk about UiPath, especially now, you have to talk about maybe generative AI, ChatGPT integrations. might be happening as well. We don't know exactly when, but probably Wall Street is anticipating something like that. Then for a more global view here of their growth throughout the year, so ARR in millions of dollars, a CAGR of 48% over the years, very good. Dollar-based net retention rate of 123% or 129% excluding FX impact and Russian sanctions. Now, looking at the 123%, I believe last quarter was 126%, so of course it's a bit down quarter over quarter. But if we look at this one here, excluding the FX impact and the Russian sanctions, last quarter was I think 130%, so 129 right now approximately. Not that bad to me. And so here you can see this is the GAAP financial metrics. So you can see GAAP operating loss, a big improvement here year over year, fiscal year 23 to 22, good improvement there. Quarter over quarter here, small improvement-ish, so we're fine with that. Obviously on a non-GAAP basis, you can see free cash flow for this quarter, huge increase here, and that's why they end fiscal year 2023 at basically break even. So of course the market again anticipates fiscal year 2024 to be a much better year for the company. And now as for guidance, they expect for Q1 ARR between $1.24 to $1.25 billion, revenue between, well, at the midpoint $271 million, and non-GAAP operating income of around $5 million. And as for the full year, ARR of $1.42 to $1.43 billion, revenue between 1.25 and 1.26, let's call it, and then non-GAAP operating income of approximately $120 million. For this year, remember, non-GAAP operating income for this year was $65.2 million, so basically doubling that. And now before we end and conclude this video, I just want to go to the earnings call, talk about that segment when they touch on ChatGPT. So one analyst here asked, this was a very strong finish. My question was, like the last few weeks, we had a lot of news flow and news items around the advancements in AI with ChatGPT, etc. And can you remind us, please, like how you're playing in there in terms of either doing it yourself or partnering with the other guys, and how do you see the involvement of AI there for your own business? And then I had one follow-up. We're not going to touch on the follow-up. We're just going to have a look at the answer here of the co-founder and CEO. So basically it says here, very excited with the advancements that AI has made, all the, let's say, we'll call it hype, but all the news that came out, etc. Very excited there. So it says here, we are looking forward to continue to infuse generative AI across our platform. I would like to emphasize the use of GPT-3 and large language model in our upcoming Clickboard AI. And this is going to be a tool. By the way, there is already GPT-4, so maybe we might update it. So this is going to be a tool that caters to all business users, basically will allow everyone to transfer information from any source, every document to any application. Imagine many few thousands of fields converted, transformed in one step. And then goes on to end, it's going to save tremendously in terms of productivity, and we are using a huge combination of our own AI models, GPT-3, Google, Amazon, everything that is combined there. So I'm again extremely bullish for the prospects of UiPath with adopting the generative AI technologies. So rest assured they are going to enjoy this AI hype quite a lot. Not just because it's just hype, but because this company is already rightly positioned in that industry, going into that direction as well. And again, why not increase your productivity? If you could use UiPath, maybe with an integration with ChatGPT, why not do it? If it will help your business, if you will be more productive, if you'll have more output, less cost, why not do it? And again, this is, I think, the long-term bullishness, let's say bull thesis for UiPath, right? We're going into a more automation type of economy in every single industry. So if you're the leader, let's say, in that field, you're probably going to gain a lot of traction over time. Just a matter of time until growth reaccelerates and this becomes, again, a growth company, not a company that just grows 7% year over year for a current quarter. Let's see what happens throughout 2024. They're pretty bullish for their year. Analysts are pretty happy to hear that as well. Of course, do share your thoughts down in the comments below. What you think about this company, this quarter, how they ended the year, obviously integration with ChatGPT, etc. What do you think about that? Let me know down in the comments below. If you enjoy this type of videos, give it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.